Mr. Chairman, I thank you.
Thank you, Mr. Cummings. Let me turn to questions. One, again, thank you to the panel. In the goal of introducing this legislation is to have a thoughtful constructive discussion on what role we want the Fed to play going forward to create the strongest foundation for economic growth and output in the United States, and to have a clear mandate from Congress in which we hold the Fed accountable to that mandate without confusion going forward. As we talk to policymakers in Washington about this issue and the public as well, there are sort of two myths that arise quickly, and because Dr. Poole and Dr. Taylor referenced it in their testimony, I'd like you to comment on it if you would. The first is that a single mandate on price stability will then ignore unemployment issues. We're at over 8% unemployment. Jobs are a critical feature, critical desire of our country. You know, how can we move to a single mandate during these times? The other myth is that somehow a dual mandate is etched in stone, that it would be an unusual move to focus back on the purchasing power of the dollar, when in fact, you know, the 30-plus central banks around the world, the vast majority of them put the single mandate price stability as either their sole or their primary focus. In fact, the greatest period of time in the U.S. history, economic-wise, is associated with the single mandate focused on price stability, that we've, in fact, won 2 Cold Wars, put a man on the moon, and grown our economy dramatically without a dual mandate. So I'd like Dr. Taylor and Dr. Poole to address those two myths, that this somehow would cause the Fed to ignore the business cycle and employment issues, and that a movement back to a single mandate is somehow unusual. Dr. Taylor?
Thank you. The single mandate, single goal, does not preclude the Federal Reserve from providing lender of last resort or providing liquidity in a panic. It does not preclude the Fed reducing interest rates in a recession. These are part of the ways that you implement the single mandate. I certainly made that clear in my research for many years, that the mandate is a way to get the Fed from doing more harmful things, a single mandate. And you can point, as people have, to the good record on inflation. But in the meantime, the record on other things has not been good. We have had a great recession. We have had a financial panic. We've had a very slow recovery. And I think you can point to actions of the Federal Reserve as significant factors in these events. I mentioned the very low interest rates in 03, 04, 05. That was, in a sense, an intervention, an extra intervention of the kind that they would not have done in the 80s and 90s. More recently, the interventions in the quantitative easing causing confusion, not knowing whether they had an impact or not, when they're going to continue, when they're going to stop, and how do you reduce this gigantic balance sheet. These are all things that I think are negative with respect to economic growth and employment. And the Fed, of course, has capabilities of avoiding these interventions, as it did, as you mentioned, in much of the 80s and 90s. But the legislation such as the Sound Dollar Act would assist the Federal Reserve, would incentivize the Federal Reserve, and help encourage that kind of better economic policy.
Thank you, Doctor. Dr. Poole?
Congress could certainly adopt a 2% inflation target, could support the Federal Reserve's decision, the FOMC's decision that was announced on January 25th. The Fed was clear in the memo that it sent out, press release on that it could not adopt an unemployment target, a percentage, because it was not within the control of monetary policy. I don't see anything inconsistent here. Congress could have an objective of lower unemployment, understanding that that objective would have to be pursued through fiscal policy and regulatory means, but not assigned to the Federal Reserve. So I don't understand that the legislation that we're talking about here would downgrade in any way unemployment as an objective as a national objective. It is certainly a national objective. It's just that the things that create unemployment are not subject to being fixed, if you will, by Federal Reserve policy. Now, having said that, I want to emphasize that the Federal Reserve, with confidence in the markets about price stability, can cushion disturbances in the unemployment rate and can act to help steer the economy in the right direction in terms of employment and economic growth. But that's not the same thing as saying that the Federal Reserve can achieve a numerical target or ought to be assigned a numerical target for the unemployment rate.
Thank you, Dr. Poole. Senator DeMint.
Thank you, Chairman Brady. I appreciate